It's officially 7:05, so we are going to start this webinar. Welcome everyone. Thanks for joining the Buying a Home in the Netherlands webinar. My name is Kimo Paula. I'm from Expert Housing Network, and I'll be your host tonight together with my good colleague slash friend Cesar from Mr. Mortgage. We'll share a little bit more information about the companies in a few, and we'll have Ludo who will be supporting us with the Q&A and also with some of the questions that we're going to ask you. So it's a team of three, the three musketeers here tonight. Looking forward to it. We've mixed up the presentation a little bit. This is the first time, so if we make some small mistakes, please forgive us. But we're going to try and do our best for everyone. Let's give it a go. Today, there's a few things we're going to talk about. First, of course, we're going to talk a little bit about ourselves, and not because we think we're so great, but I think it's good to get to know us and the companies behind us as well. And then we're going to talk a little bit more about renting versus buying, the actual buying process, and then we'll have an FAQ. But let's first start with who we are. By the way, I just mentioned that or missed that the session will be recorded and the presentation and the video will be shared with you guys tomorrow. And otherwise on Monday. So no need to take notes. The other thing that I need to mention is if you have any questions for the Q&A or during the session, please ask them in the Q&A section of Zoom because that's where we'll actually look at them and answer them. So if you have any questions, don't hesitate to ask. But what we'll do is we'll save everything up for the last couple of, 30 minutes, an hour to answer as many questions as we can for you guys. Like I mentioned, my name is Kimo. I'm from Expert Housing Network. I'm the founder and I'm a buying agent. And I have a lot of colleagues, but these are the colleagues that will be supporting you guys if you're deciding to move forward with us to actually support you with buying. One thing that's good to know is that the majority of the people working at Expert Housing Network are also internationals. They know what it's like to move to a new country and have bought houses and know what it's like to actually set up a new home, find a new home, and go through this crazy roller coaster called the buying process. We're here to make sure that you can enjoy it. You can hold your hands up in the air and enjoy it a little bit, and make sure that you buy something that you actually enjoy living in afterwards as well, and that you don't end up buying something that turns out to be a bit of a bad value for money place. You've already met Ludo, but Giovanna's from Brazil, Alana from Ireland, Dominic from the UK, as well as Juliette. Me, myself, I am Dutch, and that's as far as Expert Housing Network goes. Cesar, maybe you'd like to share a little bit more about Mr. Mortgage.
Thank you, Kimo. Thank you for having me. Thank you for everybody who joined the webinar. My name is Cesar Yilmaz, founder of Mr. Mortgage and also a financial specialist. On the slide, you can see our team, Robin, Egle, and Uskan. We make sure that when you work with us, the mortgage application gets approved. Started the company because my parents came here 50 years ago. There was a bit of a distance between the financial jargon and what my parents spoke, so they never took advantage of what the financial system offers. And that's mainly my reason to start Mr. Mortgage, is to help internationals understand the financial system in the Netherlands and see how they can use it in their advantage. So
great to have you, Cesar. Today's goal is to add value to you guys, and we believe in sharing information freely. So we're going to try and converge some of the bulk of information into some useful pieces for you guys. Again, the presentation is going to be about 30 minutes, and then there'll be plenty of time for the actual Q&As. I know that some of you, or a lot of you, are going through specific situations, are from different countries, name it. So I think that a lot of the questions might be different. So we just want to make sure that we can offer you the added value. But let's first start off with a little newsflash. There's a few things that have changed since the beginning of this year. We can still talk about them. The first one is the National Mortgage Guarantee. This might be interesting for anybody that is going to purchase a property up to 325 this year. Last year, the threshold was 310,000 euros. This year, it's 325,000 euros. What is the national mortgage guarantee? It allows you some sense of guarantee when, for example, you get a mortgage and you, for example, lose your job, or something happens to your partner, or you get injured permanently. Then let's say you have to sell your house. Then if your house is worth less than the actual mortgage is, then this is covered by the national mortgage guarantee. What might be good to know is that this only applies if you purchase a property up to 325,000 euros. This has nothing to do with the actual value of the property. It's the actual purchase price that you pay to the seller. We do get a lot of questions about that, but whenever you try and consider if you actually are eligible for the NSG, then always keep in mind that what is the actual amount that you're paying to the seller that is leading in whether you are actually able to acquire the national mortgage guarantee. There's a few costs involved, but it's also interesting because the mortgage rates are much lower. Then some transfer tax. Cesar, maybe you would like to share a little bit more about that? You're on mute, yeah.
Sure. Yeah, thanks. Sure. So a couple of things have changed. So when you buy real estate, the government will charge you a so-called property transfer tax. What happened last year? So a lot of first-time home buyers couldn't buy property because of increasing prices, because it simply got more difficult. So what government has decided is, how can we make it easier for first-time home buyers to purchase their home? What they decided, between 18 and 34 years old, you are exempt from paying the property transfer tax, which is usually 2%. In front of you, you can see a couple of scenarios. So when you're single, it's easy. So the example is Kate is single. She's, let's say, 33 years old. Purchase price is 400K. That means that she's paying 0% on transfer tax. This is until the 31st of March. After the 31st of March, this becomes 2%, and then the absolute maximum purchase price is 399,999. Going on to the second scenario, Kate is 37, John is 33. So couple, one of them is younger than 35. In that scenario, Kate, who is older than 30, or is older than 34, she pays 2% on her share of the property. Usually that's 50%, and John is paying 0% on his share of the property. In the end, the couple pays 1%. Another scenario, couple, both aged under 35. One of them has already used the tax exemption, Kate in this example. And then what you see is that Kate is paying, because it's going to be her second property, 2%, and John is paying 0%. There is, so you'll receive these slides in a couple of days. You can see the big blue button, visit the transfer tax checker. You can put in a couple of details, and the transfer tax checker shows you if you need to pay transfer tax or not.
Perfect. Thanks, Cesar. This is where a new part of the presentation kicks in, because we'd love to learn from you guys as well. And we prepped a little poll, like a few questions that give us a little bit more information about you, where you're on the process, and so on. Let's see if I can launch this, and bear with me. I think there's how many questions in here? There's about 5 questions in here. Please feel free to share. If you're not keen on sharing information, no worries. We're not going to use this information in any way, just for us to be mindful of what kind of public we have. So I'll give it a minute or two. Please put in your answers, and then we'll move forward.
I'm happy to see that there are coming some questions in the Q&A. So thank you for that.
Mm-hmm. So just looking at the, I'm not sure if you guys can see the actual answers as well, how people are doing, but it seems like the majority of the people are actually coming through Facebook, and the ages between 26 and 45, the average age. There's a lot of singles, there's a few couples and a few families here. And the majority is looking to buy in Amsterdam, then The Hague, and then Eindhoven and Almere on a, oh, sorry, Utrecht as well. And Almere is on the fifth place there. And why did people decide to buy? The rents are too high. Well, we can completely understand that. They would like to settle, and they would like to build up equity. And it seems like there's almost equal, so 1/3 in each answer. So that's nice. I think that the majority have answered now. Thanks a lot. This is the first poll, but it's already good to know this information. Cool. Oh, I can actually share the results. Look at that. Boom. Now you'll see it as well. The winner is cool. Okay. Thanks a lot for that. That was very, very useful. Interesting to see as well. We're going to continue with the presentation. Because we're first going to talk a little bit about renting versus buying. Cesar.
Yes. So it may be weird for me to hear, but you should really decide if you want to rent or buy. Even though maybe all of your colleagues say you should buy, maybe all of your friends say you should buy. We saw that people are saying that they're paying too much rent, but still renting has benefits. A couple of benefits to share. So it gives you flexibility. So you could simply cancel your tenancy agreement and leave. You don't have to pay any taxes. You don't have to worry about maintenance, and there's no down payment required. Couple of cons when owning a home: you need to pay taxes, property tax, homeowners tax, municipality taxes. You need to worry about maintenance, and you're not as flexible when you want to move out, because you will need to sell your home. So if you are, even with these pros or benefits when it comes to renting and the cons of owning a home, I don't know who's still interested in buying a home. I wish I could see all of your faces. So buying obviously also has benefits. Owning a home gives you stability. You don't have to worry about rents going up, and you can settle in your home. The monthly payments that you do will build equity. When you pay rent, it's you're burning away that money, and you will never see that back. With the monthly payments for your mortgage, some of it goes towards repaying your debt. So at some point, we'll see that back. And also, there are some tax benefits to owning a home. One of them is the mortgage interest deduction. So the interest that you're paying on your mortgage is tax deductible. So that means that you'll get part of it back. Rule of thumb, it'll be around or between 25 and 30% of what you're paying on interest. So those were the benefits of owning a home. Downside of renting a home: rents could keep increasing. There are no tax benefits, and you're not creating any wealth or capital. This is a comparison to show you what it means in figures. So on the left side, you see a property, Gerard Douwstraat. The rent that is asked is €2,250 per month. which makes 27,000 per year. This is for a 80 square meter apartment. So that's a rental. Same street, more or less the same property, 88 square meters. The ask is 525K. If you compare the mortgage payments and the closing fees, so on the left side we saw 27,000 burning away, but gives you flexibility to move. On the right side you see the mortgage payments. Obviously we don't know what the actual purchase price of this property was, but we use the asking price. Interest rate 1.58. Current rates are a bit lower, fixed for 10 years. This is the monthly mortgage payments are a bit over 1,800. What a lot of people do, and what I mentioned earlier, so on the left side you are paying 2,250 per month, money burning away. On the right side you can compare it to paying interest. So you're paying 1,800 per month, and of that 1,800, almost 700 goes towards paying interest. Obviously, when you buy a home, you have to deal with closing fees. The closing fee that you see, 23K, is including the property transfer tax of 2K. But even then, if you stay in that property for longer than 15 months, then you hit a bit break-even point, and it's becoming cheaper to live in the bought property than in the rental property. So what's also interesting, I mentioned before, you are building up equity because you're repaying your mortgage. So what you see after 5 years, the mortgage has dropped to, or the principal has dropped to 454. It means that if you sell the property against the same price in 5 years, then you only have to repay the bank what you owe them without missing interest payments. So the cash at hand after 5 years becomes 71K. Is this a topic for you, Kimo? What you will need savings?
Yes. We'll share a little bit more about the closing costs or the purchase costs, as I mentioned in this calculation as well. There are a few things that are good to keep in mind when you buy a home. And first of all, you need some capital to actually complete the whole transaction and process. We're going to go over some of these. There's 3 columns you see: first with the type, the second what it will actually cost you, and the third is if it's actually tax deductible. So can you deduct some of this from your taxable income at the end of the year? Let's first start with transfer tax. That will be 2% of the purchase price. However, Cesar just mentioned, if you're below 34, if you buy up to 400,000 euros, or if you are able to actually get the keys before the 1st of April, and you're able to spend a little bit more, then you should be eligible for that exemption. If not, then you'll pay 2% purchase price. This doesn't go for new builds, so that's good for you to be mindful of. Then you have the notary costs. They're separated into 2 subsections. One is for the mortgage and one is for the transfer. What is good to know is that the government wants to kind of like motivate people to actually get advice and specialists and everything on, because a mortgage product is relatively a complex product. So what they want to do is they want to make it attractive for you to do that, and therefore everything that's related to your mortgage is tax deductible. So the notary's work to draft up the mortgage deed is tax deductible. The notary's work for the transfer deed is not tax deductible. The bank or your mortgage broker is tax deductible, but the real estate agent unfortunately is not. We're lobbying our ass off to make tax deductible as well, but it might take a little bit longer. The appraiser is tax deductible because you need it to actually get your mortgage approved. Technical inspector 425 is not tax deductible. Interpreter is something that you would need at the moment you actually become the owner. So there needs to be a sworn-in interpreter who can translate to you what the documents say, because the final documents will be in Dutch. Then you'll have the bank guarantee. and NHG, which is a small percentage of the amount that you're going to mortgage. Take into account that if you're eligible for the exemption for transfer tax, you'll pay 2 to 3% of the purchase price. If you pay the transfer tax, then you have to pay about 4 to 5%. So that is something that you need to keep in mind, having savings when you actually start the process. Of course, the money will be due a little bit closer to the end of the process, but still, sometimes if it goes quickly, then it's good to have that cash in hand. So those are the purchase cost or the closing fees, as we call them. Then we'll share a little bit more about who you'll meet during the process. First, you'll meet the notary. Well, he's not the first one you'll meet, but we always put him first because, first of all, they draft up the most legal documents, so that it's very important to make sure you get a good notary in hand. What's good to know is that in Amsterdam, the notary also drafts the purchase agreement. Outside of Amsterdam, the selling agent drafts the purchase agreement. So please double, triple check the purchase agreement if you buy a home outside of Amsterdam. And then he'll also draft up the mortgage deed and the deed of transfer. He'll make sure that any mortgages outstanding will be closed off and that it's validated whether the seller has any outstanding debts on the property or claims on the property. And he also has to make sure that you are a valid party. So he needs to double check your identity, but also needs to find out if the money that you bring into the property is actually, or where it comes from. So he has a role to play. He's an independent party. The Dutch way of doing things though is that the buyer actually pays for the purchase fees. So they'll be at your cost. He'll come into play once your offer is actually accepted. So you don't need to pick a notary before that yet. Make sure that you have one at hand as soon as your offer gets accepted and you need to draft up some of these documents. Then you'll meet the appraiser. Michelle, she'll come buy the property once your offer is accepted as well. I wouldn't advise to get a pre-appraisal done on the property. Why not? Because it's going to cost you money and there's a very strong chance that your offer is not going to get accepted. So what you do is you get your offer accepted and then you build in some time between offer acceptance and where you sign your purchase contract. And in that meantime, you get your appraiser in. Why does she need to come in? Because the bank will say, we need to know what the value is, because the bank will only give you 100% of the value of the property. How do they do that? Okay, they request a appraisal report that is checked by an independent party, because you're actually paying for the appraiser. The appraiser comes up with a report. He or she has to send that to an independent party. They check if the appraiser played by the rules, and then once they validate it, then it can go to the bank, and the bank will take it for granted as the value of the property. This process takes anywhere between 3 to 7 days. So build in some time between the moment you get the offer accepted and you sign the purchase contract. Then the building inspector, Millie, she also comes in after your offer is accepted. We would always advise to get somebody to inspect the property who has a background in construction, because you never know what you might find. And these guys or girls, they have good eyes for that, and they can tell the difference between a horizontal or a vertical, horizontal, vertical crack. See, that's where you go. So it's super important to get somebody in and make sure that they understand what the condition of the property is, because you don't want to buy a property and then 3 or 6 months after you've moved in, find out you need to renovate the whole roof or replace the CV kettle, the boiler, or do things that you don't want to do. So get somebody in. It's due diligence. It's probably one of the biggest decisions that you'll make in a long time. And with the speed of the housing market, most often you only get the chance to view the property once. And sometimes you get a second option, but it's always good to get a second pair of eyes who have that background to double check on the quality of the property. Then you'll meet Robin from Mr. Mortgage. What they do is they actually secure the mortgage for you. They'll make sure that all the documents and everything is in place, and that once everything is in place, the application is submitted and the application runs smoothly as well. What we always do is we compare banks to retail shops. So you go into a shoe store or you go into a clothing store, and they'll try to sell you the products that are on shelf there. And if you go into a shoe store that is actually a bank, you'll see maybe 3 products or 4 products, not a lot. So they don't have a lot to offer, and they do try to sell it to you. And what the mortgage broker does is he's more of a personal shopper, stylist. Just look at the clothes on the guy. No, but honestly, what they do is they don't really care which bank you go with, as long as you're happy with the product and you're aware of what product you're getting and that it fits your requirements and needs. They have a range of about 30 to 40 products that they can actually choose from. So make sure you have a chat with them, because I do think there's definitely an added value there. One thing that I didn't mention in this slide, but what we're seeing, especially in the very competitive markets, it's very well important to make sure that your offer is competitive, is appealing. What is an appealing offer? An offer that gives the seller the security that you can actually move forward. And when you get a mortgage broker that can actually support you with that part by saying, okay, hey guys, we are almost certain that you're going to be able to get that mortgage, so you can play around with that a little bit in the offer, which will definitely give you a little bit of an advantage compared to somebody who doesn't have that in. So that is also a thing that's often very overlooked, and people just look at, okay, hey, what do I have to pay for a bank or mortgage broker, and base their decision on that. But there's more going into the decision and also the process that they can play a role in. Then it's the buying consultant. That's us. What do? We hold your hand during the process. So we make sure that everything runs smoothly, that you know what to expect, when to expect it, and not what you need to do at what given point. It's from the moment you actually find a property that you're interested in to the moment you become the owner. And even after that, we'll support you. I think 3 core parts of what we do is making sure that all the documents are reviewed and you understand what you're buying. So any property documents that share information about the property itself, or the owner association if it's an apartment, or anything that's related to the property, we'll review that and make sure you're aware of what it says and what you're actually buying. The second thing is price research, making sure that we understand what the actual value of the property is, because in the end, the bank will only give you 100% of the market value. Let's give you an example. You find a property that's 400,000 euros and you want to offer 460, but actually it's only worth 420. So what you need to make sure of is that you're aware of that, so you don't end up buying a property and having to put up the 40K in difference yourself if you don't have that. So that's where we come into play. And then the other thing is when it comes to legal documents that are drafted by the notary or by the selling agent, in case you're buying outside of Amsterdam, we'll review those as well. And we'll chase all the parties that need to be chased. We have a very big network of people that can also support you, whether it's appraisers, whether it's technical inspectors. We're here to support you in that. So that's where the added value of my colleagues and my team lies. Okay, those are the people you meet. Then this is the timeline. It's a very rough timeline. So you start the search. I'm not sure if you can see my cursor. You start the search, and then this is a little bit skewed, this time frame, because this can take a little bit longer depending on what you find on the market. Especially in the winter, it's slower. And when I'm talking about winter, I'm talking about December, January. We see things pick up a little bit already, and especially with the 1st of April coming, which is kind of like the expiration date for properties above 400K. We see a lot of properties coming on the market in these weeks. So there's definitely plenty to choose from. There's also a lot of competition. So make sure that you get that offer accepted. And once you actually do, then you have about a week to get everything done. We call it the due diligence time, where you get the appraiser in, you get the technical inspector in, and you make sure that you actually join one of them so you can see the property again, especially if you've only seen the property once before you submitted the offer. Because I think that especially, it's crazy. You spend 400,000, 300,000, 600,000 on a property and you've seen it once. And make sure you can see it again. And if you're still in love with it, it's a good choice. But you get the due diligence done, and then you sign a purchase contract. If it's in Amsterdam, you'll sign a purchase contract drafted by the notary. If you're buying outside of Amsterdam, you'll sign a purchase contract that's drafted by a seller. Sometimes they try to push you to sign as soon as possible because they also want some sense of security, but make sure you do your due diligence. Once you've signed the purchase contract, you technically have everything that you need. You have your appraisal report, you have the purchase contract, Mr. Morris has requested all of the other documents, so they should have a complete file, but you still have about 3 days to reconsider. Let's say you wake up suddenly in the middle of the night sweating, you're like, oh my God, what did I do? And you want to pull out. You can still do that in those 3 days because technically or by law, you have those days to pull out without giving any reason. We call them the cool-off period. If something were to happen, you can use that period. Afterwards, you're kind of locked in to the deal unless you have clauses in the contract that allow you to pull out. One of the most famous ones is a finance clause, which allows you to pull out if you don't get your mortgage. But that shouldn't be the question in this case. If you get somebody on who can actually support you, after the cool-off period ends, you'll have like a quiet period. Well, not necessarily super quiet, because you'll be able to maybe meet up with the seller and do some measures and so on. This is where your mortgage application is being processed by the bank, and hopefully you'll be able to hear from Mr. Mortgage that your mortgage is approved within a few weeks. On average, it's about 4 weeks. I know these guys can do it much quicker, but sometimes, especially in summer or during the holidays, banks are closed or understaffed, so it might take a little bit longer. Once your mortgage application is approved, hooray, congratulations. That's kind of like the last hurdle. And then you'll have some time between that and where you actually get the key. But about 7 days before you get the key to your property, you'll get an invoice or a statement of completion, as we call it. It's kind of like a collection of all the costs, collection of all the things that you've received. Well, that's mainly the mortgage. And then there's a discrepancy there because the purchase costs will have to be paid to the notary as well, who will then pay all of the different parties. So let's say you have a property that's 400,000 euros, the bank gives you 400,000 euros, but the service or the purchase costs are between 4 and 5% if you pay transfer tax, then you'll have to pay that to the notary. So make sure you have that money in a Dutch account by then, about 7 days before the transfer takes place, because it has to be in the notary's account on the day of transfer. Okay, you get the key on the day of transfer. This is where you also sign the transfer deed. It makes you the owner of the property. It transfers the title to you. And you also sign a mortgage deed, which makes you the owner of a mortgage. And then you have about 2 months after that to raise anything that the seller should have disclosed before you got the keys or on the day that you got the keys. Let's say, let me give you an example. We had a purchase a while ago, and it turns out that one of the power sockets wasn't working. We had somebody come in to inspect it. Normally it's a small thing, right? But it turned out that they had to rewire part of electricity circuit, and that would cost quite a lot of money. The seller lived in the property for quite a long time, so he should have been aware of that. He never disclosed it. When you inspect the property, you don't go and try out all of the power sockets, right? That's not something that you technically do. So what we did is we held the landlord liable. But the longer you wait, the more difficult it becomes to prove that it was like this when you got the key. So don't wait too long for it. I'm not saying you bake a cake the first day when you move in, but try and be a little bit aware, vigilant in the first week that you're in your property. If there's anything that they should have disclosed, then they have responsibility to do that. That is the timeline. This was a part of the presentation. Now we have about 10 frequently asked questions that we'd love to ask you. But before we do, we have some more questions to ask you. I forgot about that. That was actually supposed to happen before I started my little piece about the process. This is where we kind of like fine tune this whole presentation. Let me put it up. Let me see if I can actually the buying process, because we talked a little bit about that, right? And what we're curious to hear from you guys is where in the process are you, and if you actually chatted to an agent or to a mortgage broker. We're very curious to hear that from you and see where you guys are at. This might also help us a little bit with some of these frequently asked questions that we can answer for you. Also allows me liberty to pour a drink. Cool. Okay, this was a very short poll, so thanks a lot for answering these. I think the majority of you have answered them. Let me share the results. So where in the process are the most of you? They're still researching, so they're kind of like deciding whether they want to buy or not, or in the process of, okay, hey, does it really make sense? There's a few people that are actually viewing properties. One person has made an offer, and one person we need to congratulations on getting your offer accepted. The majority of you have not talked to an agent yet, and also not to a mortgage broker yet. But some of you have. So I'm very curious to learn if some of the things that we actually share with you tonight are new information, because I believe that when you talk to an agent or a mortgage broker, they should disclose quite a lot of information to you. Cool. Thanks a lot for that. So we'll go over the frequently asked questions. Ludo, would you like to ask them?
Yes, that sounds good. Good evening, everyone. So we have the first question for Cesar. The question is, as you all can see, can I get a mortgage with a temporary contract or as a freelancer?
The short answer is yes, you can. So if you have a temporary contract, or if you're employed, what will happen is that your employer needs to fill out a statement. This is a standardized statement, and on that statement, they can tick a checkbox if they intend to give you a fixed contract or not, or an indefinite contract or not. If they fill out yes, then the bank considers it as if you have an indefinite contract. If your employer is ticking the checkbox no, then we can still apply for a mortgage. However, it can also mean that you'd have an additional risk because your employer is not going to extend your contract. So what will you do then? But you could still get a mortgage. As a freelancer, the bank will look at your track record. You need at least 12 months. There will be a deduction from your income if you only have a short track record. Short is 1 or 2 years. From 3 years on, the bank looks at the average income that you generated, and that income will be used for the mortgage application.
Okay, all right. Then the next question is for you, Kimo. What happens if you want to leave the country after several years?
This is a question we get a lot. It's understandable, right? Like you guys have moved here from another country, the majority of you. Who knows what's going to happen? Maybe you'll relocate to another country for your work, or maybe you want to go back home, or maybe you just had it with the Netherlands, which is no. I think you'll love it here. That's why you're probably buying a home. But there's several options, things that you can actually do. The first one is you can actually keep your home, but still have your mortgage costs, right? Like you're still allowed to have your home even though you don't live in the Netherlands. But yeah, then you'll bear those costs. The second thing you can do is rent out your home, but you need permission from your bank for that, because the bank has added this clause in your mortgage deed that states that you cannot rent out your home without their permission, because it just poses an extra risk for them. Rental properties are not maintained as well as properties where people actually live in themselves, or the owners live in themselves. So this is something that you need to be aware of. If you were to decide to do this, then that might have implications on your mortgage. And then the third option is you can, of course, sell your home. There's no penalties on that, and there's also no capital gain tax. So if you make a little bit of profit, that's great for you. You won't have to pay taxes over that. So those are the three options that you can actually apply.
All right. Cesar, can you tell me how much I can borrow from the bank?
As a rule of thumb, but it really needs to be calculated for you. You can borrow around 4 to 5 times your annual income. But then the definition income is a broad term. So what is income, and how much you can borrow from the bank also depends on your entire financial position. What do I mean by that? They also look at your assets, your debts. If you have debts, then that will have an impact on how much you can borrow. For example, if you are leasing a car, or private leased, if you bought or leased a mobile phone, that can also have an impact. What the bank does is they look at your income, and then they look at how much you can spend every month on housing. I am using the term housing on purpose instead of how much you can spend on a mortgage, because if you, for example, need to pay ground lease, then that will have a negative impact on how much you can borrow for your mortgage. But this is something that we can all do for you. So yeah, I hope that answers the question. It needs to be calculated for you. That's yeah.
Cool. All right. And Kimo, can you tell us a little bit where we should buy a home?
This is one of the reasons why we asked you to submit some more information on where you're interested in buying a home. But I think that there's three things you need to take into account. I think first, quality of living is important, right? You're buying a home. Most of you are buying a home to live in yourself. So have a look at those things. Have a look at the neighborhood that you're going to move to. Have a look at the amenities, but also have a look at the quality of the homes, right? Like in the end, you want to have a home where you feel comfortable in, but also something that doesn't require you to put a lot of money into in the first couple of years that you're moving in there. So that's probably one of the first and foremost important things that I would advise you, because some of you might think, okay, hey, I'm leaving this country in a couple of years, but I heard plenty of stories where people say that, and after 12 years, they're still here. And then, yeah, you want to make sure you actually live in a comfortable house. The second thing is value for money, of course. Have a look at the average square meter price that you see in that city and just kind of like balance that out and see what neighborhoods are below that, what neighborhoods are above that. Because I think that what you don't want to buy is you don't want to buy a property that's already the top end of things, because, well, there's a likelihood, it's kind of like the same with some stocks, right? If they're too expensive because there's a lot of pull, like there's a very small or a very realistic chance that the prices are not going to be maintained if something were to happen. So have a look at where you are on that average and make sure that you don't spend all of your money too much on a neighborhood that is overpriced at this point. What you can of course do is you can look at the price developments over time in some of the neighborhoods, and also just look at the neighborhood itself, like how many projects do you see there. Again, combine it with the quality of living, because that's for yourself a good combination. The third thing is, of course, how will the neighborhood or will the area develop in the near future? There are several things that can have an impact on that. Of course, accessibility is important, right? For example, if we look at Amsterdam or some of the other cities, then public transport is well connected. That's a really important thing. But also look at some of the projects nearby. Look at some of the districts nearby. Is it close to a financial district? Is it close to universities? All of these things might have an impact on the future of the area. Of course, well, in this case, look at COVID. What impact might that have? I think we'll have a question in a few about that. But these things definitely have an impact on the properties that you purchase. There's one thing, for example, that you hear a lot: if you purchase or if you find out where the creatives are, it's very likely that in the next 5 to 10 years, there's more project developments going on there. Because it's, for example, relatively cheap to live there right now. And especially in the bigger cities, we see that building ground is relatively expensive. So if you can find areas where it's still relatively affordable to construct or to develop new projects, then that might mean that the price are going to go up. But again, don't think in terms of 1 to 2 or 3 years, think in longer terms. So when you look at that and you decide, okay, hey, we'll probably leave the country in 4 or 5 years, then don't spend too much time on looking at large trends or projections for the long term, but mainly focus on the quality of living for yourself. Because if you find it enjoyable to live there, it's a strong chance that a lot of other people will find it as well. I hope that answered your question a little bit. I can go into specific, of course, per city, per neighborhood, but that would make you keep me have me keep you here for the rest of the night. If you have any specific questions about these, please feel free to reach out to us. We're happy to support you there.
All right. So Cesar, can you tell us a little bit more about a buy-to-let mortgage and if it's even possible to rent out a house or a room?
Sure. Yeah. I think most of the attendees are looking to buy a home to live in. So I won't go into too much details when it comes to buy-to-let mortgages. However, so can you rent out your home? So what you'll see in all mortgage deeds when you are applying for a residential mortgage or a regular mortgage is that you cannot rent out your home or apartment without the approval of your bank. Kimo already mentioned that it has an impact on the value of the property. Banks don't like this. Banks don't like risks, so they will not allow you to rent out your home. Renting out a room is possible as long as you live in the property yourself. You can get a roommate. Only thing that needs to be done then is, so tenants are well protected in the Netherlands. Even banks cannot kick out tenants when there's a foreclosure. So what your roommate needs to sign is a letter where they explicitly agree with the fact that they will not have any rights, tenancy rights or so, when the bank, when there's a foreclosure of your home. So renting out a room is possible.
Okay, cool. All right. Then the next question is for you, Kimo. The question is, what's the typical amount I should overbid?
That's a good question. And also, this is one of the questions we get asked a lot. And I think that it's logical why people ask that. They want some kind of like indication of what do I have to take into account, right? But there's no direct answer for this one, unfortunately. Why is that? So let me give you a little bit more context. The first and foremost reason is that the property prices that you see on Funda are not reflective of the actual value. And they're more reflective of how opportunistic a seller is, because in the end, the seller in cooperation with the selling agent will decide what the actual price is that you see on Funda. And if a seller hears that the market's going crazy, then why would he put the property up for less than the property value is? So some sellers actually push really hard for that, and they put up a property that is equal to the actual value of the property, or that is maybe a little bit more even, because they've heard everybody's going crazy, so let me get as much money out of this as possible. If it's a good selling agent, he'll say, no, that's not a wise thing to do, because like I mentioned before, and Cesar also mentioned, that you only get 100% of the value in a mortgage. So if we put it up already for more than the actual value, then a lot of sellers won't be able to actually finance it. So if it's a good selling agent, he'll say, let's put it up for below the actual value of the property. Let's put it up for 5, 6, 7, 10, sometimes even more below the value of the property, because that will help us with, first of all, getting more people in to the property to view it. And that will create some kind of competition, which we can use to get better offers. Sometimes if it's a bit of a shady selling agent, they'll not disclose all of the information to the selling party, and they'll use it as a way to impress the seller. But what that technically means is that there's no average amount that you should overbid, because it technically differs per property. It also differs per neighborhood, differs per quality of the property. Like the more popular a property is, probably the more people overbid or bid over the price or close to the value or over the actual value of the property. And what we also experience is that if you're very early in the purchase process, then you might be hesitant, and that's understandable, right? You might be like, hey, I don't want to go nuts. This is the first property that I've seen that I want to submit an offer on. But some people are at their 5th offer, right? And then they're like, you know what, I don't care. I'm going to do this. I want this property. So it's very difficult to gauge what the average is that you should overbid. So also always look at the market value of the property. Have somebody support you that can assist you and share with you what the range is of the market valuation, because that will help you understand what the property is actually worth. And then based on that, you can decide if you want to overbid or not. If you want to bid the market value, if you want to add a little bit more money. It also depends on how much capital you have yourself, but at least that's the most realistic and pragmatic way of approaching it. And you of course have to cater in the emotional aspect of people offering on properties. And the nicer the property looks, the more people will offer on it. The shittier the property looks, the less people will offer on it. So this is definitely something you take into account. So if you ask me what's the typical amount I should overbid, I'm saying look at the property value, the actual value of the property before you decide. And I wouldn't give you a percentage there. I hope that probably doesn't really answer the question, but it's contextualizing the question.
Exactly. Does it ever happen that the property actually gets underbid?
Oh, that's a good question. Yeah, that happens. It happens. We've had it a few times. And again, there's so many factors that play into it. And for example, the last 2 months were relatively slow months, right? Because even though that people wanted to purchase before the 1st of April, most people don't look around Christmas, don't look around New Year's. And if a seller decides to launch or list his property on the market at that given time, and he doesn't get an offer before that, then sometimes the seller gets a little bit desperate, or and then he might actually take an offer that is not as good as he wants. Yeah, the same thing applies for if a property deal falls through because the buyer can't get his financing and the seller's under pressure. So there's definitely cases where where you can get the property for less than it's on the market for, but the majority of cases definitely is for more that you see. So I do want to manage the expectation a little bit here. Yeah.
All right, good to know. Cesar, question for you. What happens if I leave my job after I've secured a mortgage?
Actually, nothing. I'll tell you what I did. I was working at ABN AMRO before I started Miss Mortgage. I bought my first apartment when I was working there, and at some point I decided to start Miss Mortgage and leave the bank. Nothing happens as long as you pay your mortgage. It would be quite a thing for a bank to say that you need to stay at your keep the same job for another 30 years because your mortgage needs to be paid. That would be quite a thing. So no, you can leave a job, but yeah, you still need to pay your mortgage. So yeah.
Okay, cool. Then another one for you, Cesar. What is the 10% deposit I need to complete?
Yeah, the easiest way to explain this would be to look at the timeline again, but I'll do it from. Thank you, Kimo. So what you see, so you see signing a purchase contract. Let's say that was today, 4th of February. Then usually, so what we already see is average of 4 weeks to get a mortgage approved. And I'll keep it easy, mainly for myself. So let's say you got a month. So it means that the mortgage needs to be approved on the 4th of March. So between the 4th of February and the 4th of March, the seller has no security at all, because the seller doesn't know if you have a job, if you have any other income streams, or if you have sufficient savings to pay for all the closing fees. The seller doesn't know anything. And because you signed a purchase agreement, the seller cannot sell the property to someone else. And if they do, they need to pay you 10% of the purchase price. So that's a lot of, so there's no security. So what the seller will ask you to do, and this is pretty standard, is 1 week after the deadline of the mortgage approval. So in this example, the 4th of March. So that would make the 11th of March. The seller would like to have some security as well, because the financial clause is the buyer's security. The bank guarantee or the 10% deposit is the seller's security. So the seller will ask you to either transfer 10% as a deposit or to settle a bank guarantee. And the bank guarantee would be a letter from the bank stating, if our client is backing out of the purchase agreement after this date, then we will pay you, the seller, 10% of the purchase price. So yeah, that's that part of, that's why you need a deposit.
Okay. All right, cool. Then the last question from the frequently asked questions, I think is relevant for both of you. What impact does COVID-19 have on the housing market?
Will you start, Kimo?
No, feel free to start about the mortgage part.
Okay. So I'll explain a bit about what happened last year during the first lockdown. So the first lockdown started mid-March 2020 in the Netherlands. And what we saw immediately 2 weeks after, rates went up, not by a lot when it comes to numbers, but still it went up, and that was shocking because the overall trend was that rates were going down, they were decreasing. So we had an interest rate of an average interest rate of around 1.6 in March, and somewhere at the end of April it went up to 1.8, 1.9. So more than 10% it went up. What we saw, however, because there's a lockdown, because economies are struggling, in particular a couple of specific sectors, the European Central Bank started stimulating economies in Europe. How they do that is by providing cheap money. Cheap money means, so the European Central Bank is the bank where other financial institutions like banks are borrowing capital, and the central bank is offering that for a very low price. Why they are doing that is so banks will give it to consumers, companies at a low rate as well. So consumers and companies, even governments, can survive the lockdown. So that was April, May, and after that, rates started going down again. Currently, we are around 1.5, so it's lower than during the or before the first lockdown. So yeah, when it comes to impact of COVID on mortgages, not a lot. Yeah.
Good.
Thanks.
Good news.
So that's another reason to benefit from that. Then from a housing market perspective, if you'd have asked me, almost was it like 9 to 10 months ago, I would have said, okay, hey, it's definitely going to impact the housing market on a short notice. That was before the stimulus kicked in, and before we had a decent summer. But also before the lockdowns came into play. And that's probably the first thing that we're seeing, is because people are spending more time at home. Home has become more important than ever. So people are more keen to actually spend money on homes. And I think that that's what we're seeing. We saw an increase in number of people looking to purchase a home. We saw an increase in number of people buying homes. Right now, the first quarter of this year, it's a bit skewed because of the transfer tax exemption rule. But I don't see that number going down anytime soon. We do see a trend from urban to rural at the moment, where people are looking for places with a little bit more square meters. But I think that will be a temporary thing, because as soon as the cities open up again, I'm talking about the amenities, there's a lot of culture, there's a lot of facilities there for the young and also for the old. I think that we'll see people flock towards the cities again. People are talking about roaring 20s. I'm not sure if it's going to be as wild as that, but there's a couple of things that also play into the housing market. One is that the amount that people are saving currently has gone up drastically, because they can't spend money on anything. So we might actually see that move into the housing market. What we're seeing at the moment is that it's moving into the stock market. I'm not sure if that's such a good idea, because at some point something is bound to happen there. But that brings us technically to the third part, and that is that there will be some backlash from COVID, because economies are currently struggling. Of course, there's a lot of money being printed, a lot of money being pumped into the system, but that's not sustainable for the long term. And how that's going to play out is very difficult to say. What sectors might be hit is also difficult to say. I think that one of the things that makes the Dutch housing market a relatively stable housing market is the loan to value. Because currently we can only borrow up to 100% of the purchase or the market value of a property, whereas about 10 years ago you could borrow up to 116%, or a little bit longer ago, actually, before the financial crisis hit. So what the Dutch government said is, okay, we need to make sure that people have a little bit more of a buffer to weather any like downturns in the economy. And that has made the housing market much more stable now than it was before. Nevertheless, we will see at some point, we will see some economical impact. And whether it's going to impact the housing market big time is a very, very good question. I think that homes are one of the few things that you don't suddenly sell. And I think that with the housing market and currently still going up, I think a lot of people will actually benefit from that growth. So even if there's a dip of a couple of percent, that's something that we can definitely have. Also, I think that the dip will be relatively temporary. I don't think it's going to be years and years before we get back on it again. But again, I'm not an economist. It's very difficult to say. I think the emerging markets have more issues or will have more issues from economical downturns than we will have. If we look at the overall rating of the economies, then the Netherlands has done a pretty good job, even though we're a very big service industry. But I think that we have a very solid foundation at the moment. One thing that I might have that I've missed that is important as well is that we still have a housing shortage. What that means is that there's not enough houses being built at the moment to manage the demand, and the Dutch government is known for not actually keeping up with the demand. Of course, you see numbers in the news where they say, "Oh, we've reached our quotum," but if you look at the amount of building permits that's been given off, it has decreased actually. So we'll see less houses being built in the near future, which is going to impact the supply and demand thing. So again, on the short term, I don't foresee anything happening. I'm not a big economist, so if there's any economic downturn, it might impact the housing market somewhat, but I don't think it will impact it hard enough for us to not advise to buy, especially considering what also Cesar discussed earlier. If you buy, then you build up equity. If you rent, you're just flushing it down the drain. So I think that it's a positive outlook. How far it can go, that's a good question. Maybe it'll plateau at some point, but for now, I'm only seeing positives this year. And also looking at some of the reports of the banks, we're seeing that the housing market price will grow not as exponentially or as large as it did before. So we're not talking about double digits, but we're still talking about single digits. And honestly, last year I think the housing prices have increased by about 11% in the more rural areas. In the more urban areas, it was a little bit lower. And maybe we'll see a switch once people can actually come back to the city again. We'll see an increase there. But so far so good. That's my assessment of the situation in the near future. If I had a glass ball, I would be sitting on the beach and having this discussion with someone else.
Cool.
Perfect.
Right. I think we reached the Q&A part. I think we have received a lot of questions already.
Maybe Ludo, before we dig in there, because
we have another poll.
Yeah, we have another poll, number 3, the last one. Especially if some of you have to leave, we understand that. We would love to get some feedback on this session. So I think this is 2 or 3 questions. Please feel free to share your thoughts. Be Dutch, be direct, be critical, brutal, honest, pleasant if you want to be, but please feel free to share your thoughts. I've just launched the poll. Give it a minute and a half or something. I think that the majority of you have answered the questions. Thanks a lot. One thing I'd like to ask is for anyone who scored the webinar below an 8. If you are okay with it, please feel free to share some thoughts with us either via email or pop a few comment or feedback in the chat. We're definitely keen to learn and to improve, so please feel free to share. Also, in case you missed anything in this webinar, there's a few people that also put that in there. Please feel free to reach out to us with any specific information that you would like to hear more about, or put it in the chat so we can actually keep that in mind for next time. Thanks a lot. Now I think that the Q&A is your domain, Ludo. Take it away.
Alrighty, thank you very much. And we have a few questions regarding the transfer tax, I see. So I'll be starting over there. A question from Max. Is the transfer tax covered by the mortgage that the bank gives, or does it need to be paid from your own savings? Maybe one for you, Cesar.
So you can get a mortgage up to 100% of the value of the property. If there's any space left, so let's say you bought the property below the purchase price, which doesn't happen a lot, then you could use that extra value in the property to borrow extra from the bank. But generally speaking, no, you cannot borrow from the bank to pay for any closing fees.
Okay. Well, like I said, we spoke about the transfer tax a little bit, but can you explain what does it exactly mean that the rule doesn't apply anymore after the 31st of March? What will happen afterwards?
Yeah, so when government was deciding on what to do with the property transfer tax, at some point they made a proposal, and they didn't think about the purchase price of properties. I'll give you an example, and that's what they figured out later. So if you're able to buy a home for, let's say, 900,000, then the government believes that if you're buying such a home, you should have, or you have an income to afford a property for that price. But the government also believes then you're not a typical first-time home buyer who has an issue buying a home. So then they will not subsidize you. And they believe that you should be able to save 2% of the purchase price because of your high income. And so coming back to the rule, so first they made a proposal, they shared it during a budget day, which was in September. It got already, it already got approved in December, but they couldn't amend the proposal anymore. So in December, when this original rule of first-time home buyer 0% transfer tax got approved, they immediately applied for an amendment of that rule, which was if the property, and that will be live on the 31st, after the 31st of March. If the property is more than 400K or 400K or more, then you need to pay 2% transfer tax, nonetheless.
Okay.
I hope that answers the question.
I think so. Then we have a question from Gal. This is quite a cool situation, actually. He asks, if someone purchased an apartment in 2018, for example, and paid the 2%, therefore in 2021, he still didn't use the exemption. In this case, if he will buy his second apartment before the 31st of March, etc., with the entire ruling, will he be entitled for the 0% transfer tax, assuming he is under 35?
Yeah. Yeah, so actually the rule is not if you're a first-time home buyer or not. The rule is, have you ever made use of the tax exemption? Mm-hmm. So the rule has only been available since 1 month. In the example that Gal is giving, if you bought a property in 2018, you couldn't have used that. So the next property that you're buying will be the one where you use the tax exemption for the first time. So yes, you can.
Okay. All right. Let's see. Then we have a anonymous attendee. Also a question regarding the property tax. How does it work with the property tax if you buy the house, live in it for a short period, let's say 1 or 2 years, and then you decide to rent it, of course, with the proper permission from the bank? He or she asks it because when you buy to rent, the tax is 8%, correct?
Correct. Yeah. Yeah. So actually, just a small note. So property transfer tax is 8%, unless you buy a home to live in. Then it becomes 2. And then we also have the rule that if you're 34 or younger and have never made use of the tax exemption, then you can pay 0%. Going back to the question, if you buy a home now, live in it for 2 years, and you want to rent out the property, then there's no transfer of a property anymore. So the tax we're talking about is called property transfer tax. Transferring means transferring the property from one owner to another. If it's your property and you keep the property, then you don't have to pay tax, property transfer tax. So no, it doesn't matter from a tax perspective, from a property transfer tax perspective, if you want to rent it out after 2 years.
All right, good to know. Let's see. A question from Natalia, also for you, Cesar. To be eligible for the 0% transfer tax, of course, you should be under 35. But is that while buying the property or while signing the papers?
Yeah, so the handover date is
exactly
important. So what is the handover date? That's the date where you receive the keys of your new property. So that's the final moment. The tax authorities don't look at what age you were when signing any paperwork. They look at the handover date and then look at what your age was at that specific moment.
All right. Okay. We have a lot of questions for you today, Cesar. I have a question from Bargov. Who decides the property share? So, for example, John is working and Kate is a housewife. Is it possible for Kate to have 90% and John 10%, for example?
Why is it not the other way around?
Oh. Yeah, it could be. This is the example.
Right. So, yeah, that is possible. It has tax implications, and it doesn't make a lot of sense because it only complicates everything, actually. So a range of between 40 and 60%. So even let's say 40 and 60% is fine. Banks approve, banks don't mind, but as soon as it's above those numbers, then the situation changes. What's also good to know, so the reason of not having this standard needs to be clear. So I would have a follow-up question for Bargov, just to know, or just to find out why would you have this 90 to 10, and why not 100% 0, for example, or 89 11.
Exactly. Okay. All right. So we've been talking quite a lot about taxes. Kimo, can you tell us which taxes actually apply on homeowners and how are they calculated?
Yeah, it's a good question. There's several taxes. Like, let's start with the municipality taxes. And well, we already talked, of course, about the transfer tax. But when it comes to like owning a home and paying taxes once you actually receive the keys, municipality is the first of them. You'll pay for use of the system. So we're talking about the sewage system, the waste collection tax, we're talking about the water system, stuff like that. You'll pay tax for that. Depends a little bit if you're a one person or a multiple person household, what you'll pay. It's a one-time fee. And then you'll also pay property tax. This is calculated based on your WOZ value. It's, I think, 0.0367 or 347 percentage of the WOZ value. So it's a couple $100 a year. That's also something you'll pay annually. And then you pay, but I always forget the English pronunciation for it. You pay homeowners tax, but most of you won't actually see that because it's calculated into your tax report on a yearly basis. Because I think you can, I'm looking at Cesarfish, you can actually deduct this from your taxable income. This tax that you have to pay, so it's a little bit covered by the interest deduction that you get back. Am I correct?
Yeah, the mortgage interest deduction is deducted by the homeowners tax. So therefore, you won't feel it. You won't see an invoice, but yeah.
So those are the taxes that you pay. And then we have a last one, but I'm not sure if the majority of you will actually have that. But when you actually garner wealth that is above a certain amount, then you might pay 1.2% over that. But for the majority of you, that's not a relevant case because that amount is quite high. And it seems like they're increasing it almost every other year. So don't worry too much about that, unless you have a couple 100,000 words in equity and so on. Then, but let's not go there. But these are the taxes that you'll pay.
All right. Okay. And also for you, Kimo, can you explain us a little bit what the NHG actually stands for and what it is a bit more?
Yeah, so the NHG is the National Mortgage Guarantee, and technically it was installed when the financial crisis hit, because a lot of the properties, we call them, were underwater. It's very cynical for the Netherlands because the majority of the country is under sea level. But what that technically meant was at some point people needed to sell their house, but the value of the house dropped below the actual mortgage that was still outstanding, and especially for people who didn't have a lot of savings, that was a big hit. So what they said is, okay, hey, let's set up a guarantee system where if you buy a property for no more than a certain amount, and each year that amount increases a little bit, then you're eligible for that mortgage guarantee. And what does it do in case there's a situation where you'd have to sell the property and the value actually drops below what you still have outstanding for a mortgage? Then it's guaranteed that amount. So let's say you lose your job and you can't pay your mortgage anymore, so you have to sell. Or let's say something happens to you and you don't have that income anymore, to your partner, so on. So in order to actually apply for that, you can't spend more than a certain amount. This year is 325,000 euros. You'll pay a little bit to actually get the guarantee. So it's 0.7% of the amount that you're going to guarantee. And then in return, you get that guarantee. And also banks will actually look at your mortgage in a different way because, hey, they're covered, most of it, because there's a very small chance that they take a loss because it's guaranteed by the scheme. So what they'll do is they'll give you a better interest rate. I'm not exactly sure what the interest rate difference is. I think it's about 0.5% or something like that at the moment. But that is very, very interesting. So if you're considering buying around that price area, then see if you can limit to 325,000 euros that you'll pay for a property. I hope that answers the question a little bit.
All right, thank you. And then we have a question from David. David asks, so if I buy with a partner who's living but not working in the Netherlands, does she lose the deduction part?
Yeah, she does.
Yeah.
You also lose 50% of the deduction of your mortgage interest or the paid mortgage interest. So it has some implications. What's also good to know, if you buy a home with a partner who is not living here, if you want to apply for a mortgage, you need to have a BSN. So that the combination of a partner living abroad but still buying a home in the Netherlands and wanting to apply for a mortgage is a dead end. So you will need to buy it without the partner.
Yeah. All right, cool. Then we have another question from David. This one is for you, Kimo. What if the building inspector realizes there is something wrong after you placed and won the winning bid? Can you pull it back then? Can you pull out?
Yeah, so that's why we always advise to get the technical or building inspector in between the moment your offer is accepted and when you actually sign the purchase contract, because legally you're allowed to pull out of the deal even 3 days after you've signed the purchase contract. So up until that very last day, you can pull out for any reason. You don't even have to give a reason technically. You can just say, you know what, I've got my thoughts, I have doubts about this thing, I'm going to pull out. But we always advise you to get a technical inspector in between that like week of getting your offer accepted and signing the purchase contract. It takes a day or 2 days for them to actually drop that report, but most of them will actually just show you what's wrong or what's not wrong with the property, so you can actually pull out. Sometimes, if things go really quickly, you can put a clause in the purchase contract that states that if you're not happy with the results of the technical inspection, you can pull out. In some cases, they'll say, but it has to surpass a certain amount. That's what the seller will try to do. There's some room to negotiate there. But yes, definitely, if you're not happy with the results of the technical inspection, then if it was still within that period before the cool-off period ends, then you can pull out. If it's after that, then make sure you have a clause in the purchase contract.
Okay. All right. And let's say the building inspector, the technical inspector, doesn't find any red flags, but within the first 3 years, something does happen with the building. Can you hold the building inspector liable then?
That's a good question. So these building inspectors, they do visual inspections, and if you can prove that they should have seen this, they should have notified it, then you have a case. But if you can't prove that, then it's very difficult, especially if it's a constructional thing, right? They're not going to open up any walls or anything like that. So if it's a constructional thing, then it's very difficult to hold the building inspector liable. But most of the time, he'll actually be able to gauge what is wrong or if it needs any work. But sometimes it's just bad luck. There's no time frame for that, but just make sure you get a trustworthy partner in place and make sure you review all the documents. If there's any history of constructional errors in the building, or if the VVE has experienced like leakages or cracks in their houses because of the foundational issues, then make sure you're aware of that. And that's why due diligence is super important, because it will sometimes service some things that that make you want to either reconsider or add specific clause in the contract, or even renegotiate the purchase price submitted.
Okay. All right, because also Amon Tero, if I'm saying that correctly, he asks, the seller is obliged to disclose any issues when asked, correctly? So
Yeah,
if there
that's
are
correct.
lead pipes or
so even without being asked, so there's two things. Yeah. One is if it's visual, then the seller can actually expect you to pick up on it, and you have the obligation to ask questions. If it's not something that you can actually see, and then the easiest way of describing this is a crack in the wall, right? That you have the obligation to actually ask questions about that. If it's something that you're not, like for example, that power socket, or like lead pipes, or a leakage that took place, but they painted over, something like that, then they have to disclose that. This is also a reason why I would require, or would actually suggest, to get a technical inspector in, because when you first look at the property and you're like, oh wow, this is the one, then most of you will not look at the flaws, right? And it's very easy to overlook flaws. So make sure you get somebody in, or have an agent that actually support you with that, and then get somebody in, because it will help you pick out the things that you otherwise would not pick up on, and you can ask questions about that. But the seller definitely has an obligation to share anything that you cannot tell from just viewing at the property.
Okay.
Oh, that answers your question.
All right. Let's see. For you, Cesar, question: does the WOZ value have any effect on the bank loan or on the mortgage that you get?
Zero. Doesn't have any impact. Obviously, it could have an impact on the value of the property, and therefore on how much you can borrow from the bank, since you can only borrow 100% of the value of the property. But no, if the property has recently been refurbished from top to bottom and from bottom to top, then no, the boss value doesn't say anything, and therefore a valuation report is needed.
Okay. All right. Let's see. Question from John as well for you, Cesar. Is there any reputable list of mortgage advisors, or is there an association they need to be accredited by?
This is the first time somebody's asking this, and I really like it.
I think it's a good one.
Yeah. So if you want to become a mortgage advisor, you need to be certified. And every 3 years, we need to perform a test again to see if our knowledge is on par. And so that is called permanent education, and the financial authorities will check and audit if we have those papers, and if we've done our test, and if we succeeded. So yeah, but there is no external list. However, when you visit the website of the Dutch Authority for the Financial Markets, afm.nl, you can see if your broker is eligible to do what they need to do, and if they have a permit to do what they are doing. So that's the only way to check it. Yeah.
I'm going to add something to that, if you don't mind, because I think that like having the knowledge and everything is definitely one thing, and of course that permit is super important. But from my experience, there are definitely different levels of quality, and especially in level of service from mortgage brokers. And I think it's super important to take a few things into account, like. Is your mortgage broker kind of like treating you as a number, right? Like, are they doing large volumes, and what kind of service are they giving you? Also, in terms of translating documents, their communication in English, just have a look at that, because you don't want to have a miscommunication about your mortgage. That's the first thing. The second or third thing is that one of the things that so it's our goal to make sure you can actually secure that property, right, and you're happy with the property as well, but making sure you have a financial partner who can actually advise you on that aspect will actually definitely benefit you in the offer process, and that's why we like to work with, and I'm not trying to kind of like plug them or push them, but still that's why we like to work with Mr. Mortgage, because honestly, I haven't had a case where they weren't able to secure the mortgage. So, and that vouches for them. But I think it's super important, because the story that they actually share with the bank is as important as your documents and everything like that, to secure your mortgage. And if they do that well, then chances are higher that you'll get a mortgage, and also they'll be able to actually pre-approve you to some extent, which will help you during that offer process. So I think it's super important to have a look at what the actual broker or mortgage advisor can offer you, how well their services, and I think it's actually a good idea. We should maybe create something where people can rate you guys. So that's my 2 pennies, if you don't mind.
Thank you.
All right, cool. Then I have another question for you, Cesar, to put all the knowledge to the test. From Georgi, can I have a mortgage if my employer is not a Dutch company?
And I think Grigori is mentioning that his employer is not based in the Netherlands and that there isn't an entity in the Netherlands. But that would be a follow-up question from my side. But if that's the case, we can still get a mortgage approved. However, not with every bank. So we work with around 30 banks. And I can tell you that only a handful will accept your situation if there's a foreign entity and you're employed by that. But in the end, it also depends on your contract of employment and what the actual situation is. But feel free to get in touch with us, and we can look into it and tell you exactly what your possibilities are.
Okay. All right, cool. Let's see. One for you, Kimo, from Wietske. She says, I'm looking at a property with a sleeping VVE of only 2 members. Will it be impossible for me to get a mortgage on this property?
There's a couple of things. So maybe let me first explain the responsibility of a VVE. The VVE has a responsibility to maintain the building, to take out building insurance, to save enough money to actually maintain it. And if there's any kind of like incidents that they manage that between themselves. I'm not sure if the amount of members in that VVE is a total of 2 or if it's if you buy the property plus 2. If it's a sleeping VVE, then there's a couple of things that need to be looked at, and I think that Cesar can maybe confirm that. But one of the things is like, is there a maintenance plan? Is there something that shows what the required maintenance for that building is in the next 5, 10, 20 years? If there is, then they've done technically their job. Like the sleeping part, unless there's no money in savings and they're not meeting on a yearly basis, then maybe the maintenance plan might not be enough, and they have to like meet up once and just have a chat about that and maybe discover what they would need to put in. But the maintenance plan is one part, and then if they don't have a maintenance plan, then the bank will require them to save enough money to actually maintain the building, and that is about 0.5% of the rebuild value. On a yearly basis. So then they no longer become sleeping, unless sleeping means that they do save money, but they're not meeting on a yearly basis. We do encounter some of these VVEs that just say, let's look at it on a case-to-case basis. If there's no maintenance plan and there's no savings, then that might jeopardize the mortgage securing a little bit. But this is something you can definitely have a chat about, first of all, with Cesar and his team, but also make sure that the selling agent is aware that, hey guys, you need a mortgage to secure this place. So there might be some work that they need to do with the VVE, and it could just be a letter where they declare that they'll start saving this much money starting then and then, and become active to some extent. Cesar, have I missed anything? Because this was technically a mortgage question. I'm happy to answer it though. Is there anything that you would like to add to that?
No, only that there are risks involved if the owners association is not financially healthy, and that's something that you need to consider.
Yeah.
Okay. All right. Is it true, I guess this is maybe a rumor, but is it true that the deduction will be removed completely from 2023? And if no, how is it going to be?
The deduction, the interest deduction.
I guess so, yes.
This is the rumor section. I love the rumor section.
Yeah.
Cesar, you're...
You have these magazines, right, that only discuss gossip and rumors. Government has been talking about this since, I don't know, 2003, I think. No, I don't know what is true. I don't think anything will change, because if the current government isn't allowed to do anything anymore. On the 17th of March, we have elections again. After that, I don't expect the new government to change anything, because it's not a popular decision. So no, I don't know. And 2023, no, I don't know. Seems a bit random.
We have a very liberal government at the moment, and they're keen on preserving the rights of homeowners and business owners and so on. And it seems like they're going to do, I think, well in the next election. At least the polls say so. Who knows? You never know. But I agree with Cesar. I don't think anything is going to change on a short notice.
Let's see. Can you still hear me?
Yep.
Yes.
Yeah, okay. Oh, it's just my internet connection is unstable. All right, let's see. A few questions for you, Kimo. Some questions regarding the bidding process. If you don't want to go too high with the overbidding, what are the elements that you can bring to the table that are valuable for the seller?
One thing is taking out the finance clause, which means that the seller doesn't have to wait until your mortgage is approved to get security about you actually moving forward. We only do this with consent of your mortgage advisor, Mr. Mortgage, because you need to make sure that you're aware of your financial situation in that case. The other thing is like saying that if you want to keep the finance clause in, make sure that you maybe put up some capital towards the purchase, where you say, okay, hey, we only need technically 50% mortgage on the property, not the full amount. Doesn't mean that you have to pay 50% in cash, but it tells the seller that you have a good case. There's all these other criteria that you can take into account. Please be mindful of when the seller wants to move out. If the seller wants to sell any of his furniture and so on, that is important. What I would do is I would write a little profile about yourself, especially if you're selling to people who've lived in the property themselves. If you're selling to somebody who's rented it out the last couple of years, then it's maybe less important. But people like to sell to other people, maybe less so to investors, unless the money's really good. But then, hey, you won't stand a chance anyways. But I'm trying to make your offer as attractive as possible for the seller. The more criteria you put in there that are restricting, the less attractive it is. The less criteria you put in there, the more attractive it is. But be mindful of the balance of, okay, hey, how am I going to be able to get the mortgage or not? Get somebody in to actually support you with that. But those are the things that you can do. Have I missed anything? No, I think that covers most of it. Of course, purchase price is still important, right? So if you say I'm going to submit asking price and you know that the value is higher than that, then that's very unrealistic. But also try to find out as much as possible about why the seller is selling, when they want to move out, if there's anything that you should be aware of that they would like to see in a buyer, and then you can tailor make your offer based on that. But if you don't have the equity or the capital to put up and maybe overbid, then don't look. Maybe that's some advice. Don't look at the properties that are brand new, right? That are very high level, very high end, because you'll most likely get quite a lot of competition there. Maybe look for properties that just have or need some cosmetic improvements, because that's relatively affordable. But some people just can't see through that. If, for example, if a grandma is selling her house, then most likely it looks like, but if you change the furniture, if you paint the walls, then it's already looking so much better. And then the only thing you maybe have to do is maybe put a new kitchen in eventually. But have a look at those kind of properties as well, because even though they might not feel like, oh, this is it, if you are able to see through that, then you'll have a better chance, and your offer just makes more sense, and you'll have a less competitive market to submit an offer on. I hope that answers the question a little bit.
Cool, thank you. And a question from Matilda, also for you, Kimo, regarding the bidding process. Does having a Dutch citizenship influence the chances of buying?
Oh, no, not that I know of. I think that unless the seller's a racist, he might take it into account, but that's very slim chance. Most of them look at the actual offer, and if it's interesting enough for them, the seller will also try and make the selling agent will also try and make the seller pick the right offer. So I think that you have to add all the criteria into the offer, and then where you come from is not that much of a criteria in the whole offer process, unless you come from the same country as the seller, and that does sometimes help. But yeah.
Exactly. All right, cool. And is it possible to then rebid, for example, if your first offer does not get accepted? What is the process, or how does the process work when someone tells us that they bid on a test process?
So there's technically two types of processes. One is there's kind of an open bid. So whenever you submit an offer, they might respond to it. That is something that you'll see often when a property just came on the market. They say, hey, we haven't received anything, so we haven't decided yet whether it's going to be completely open or whether we're going to set a deadline, because that's the second type. The deadline is an offer an offer process where the seller says, okay, all the offers have to be in before tomorrow 6 p.m. And that means that at that given time, they'll review all the offers and they'll come back to you. They'll probably pick the best offer. In that case, it's your final offer. So it means that this is what you offer, and they'll consider the best offer and then pick that one. There's not a lot of room to negotiate thereafter, especially not on a price, maybe on some small things. With the open offer process, then let's say the seller declares that he's not going to accept it or he wants more money, then you have room to negotiate there. But the danger there is that they might use your offer as a benchmark. and then still decide to make it a deadline and give other people the option to offer. And then use your offer as a benchmark and say to the others, hey, we've got this offer on the table. If you really want to get this property, you need to at least bid over this amount. So so be a little bit careful with that open process. If you do put like a really tight deadline and make a realistic offer, but those are the two types. If it's a deadline, you can't really rebid. If it's an open offer, you can.
Okay, all right. Let's say my offer got accepted. Yay, fantastic. But I do not have the 10% deposit. Is it still possible to buy the house then?
So if you don't have the cash and deposit, you can get a bank guarantee.
Okay.
Cesar mentioned earlier on, this means that the bank will send a letter that they will guarantee the amount. Sometimes there's costs involved to get that bank guarantee, but it's a fraction of the actual amount that you guarantee. So yes, you could still move forward with that.
Okay. All right. Let's see. Back to you, Cesar. Can you tell us a little bit more about variable income? So bonuses or income that comes from stocks. How much does that weigh on your mortgage, if it does at all?
Yeah, sure. Income in stocks is not considered as income by banks for a mortgage application. So that is out of the equation. When it comes to bonuses, it depends on when you get the bonus. So what is the reason you get the bonus? Is it, for example, a commission, or is it if the company performs well, then you get a bonus? So it depends a bit on what the details are in your employment contract. But it can be used. Yeah. And okay. So we work with 28 lenders, and all of them have different approaches to bonuses. Some will use 50%, some will use an average over the last couple of years, some will only use what you had in the last 2 years. Some will use 100%. It really depends on a lot of variables, but again, we would need to research what is going on and what is in your contract before we can say how we can deal with it.
Okay. All right. Thank you. Then we have a question from Lucille. Lucille asks, what happens if you sign, but then after the 4 weeks, the bank informs you that the mortgage application is rejected for whatever reason possible? What happens then?
I think that's a bit of a process question. So if you have a clause in the purchase contract that states that you can pull out of the deal if the bank doesn't give you a mortgage within that time that they actually reject your mortgage, then you can pull out. Or technically, well, this is interesting because outside of Amsterdam, you'll need to show proof of at least one rejection. In Amsterdam, they'll request 2 sets of proof. That's what you can do. If you don't have that clause in, then that is unfortunate. So then you'll have to start chatting with the seller and say, hey, I'm not going to be able to do this. What do we do? Because the seller technically can hold you liable of up to 10% of the purchase price. We haven't had that happen, luckily. Please be mindful of that, because if there's any red flags about your mortgage, you should be aware of that prior. Be transparent with your mortgage advisor, share and be forthcoming with all the information and documents, everything like that, and then there shouldn't be any surprises. If it does happen that they, or something changes in your situation, it does happen that they reject it, then the clause will save you. If you don't have that clause, then unfortunately you're eligible for that fine.
We get around 1 to 2 calls per month from people who got a mortgage rejected by their bank or through another broker. We work with 28 lenders. We know what we can do at what bank. So another option could be call a couple of other brokers, see if they can help you. Because if one broker or one bank doesn't accept you, could mean that another can or will. So that's a small tip.
Yeah, good one.
Okay. All right. Then I have another question for you, Cesar. A question from FT. His or her question is: what is your prediction for the direction of the rates in the next 1 or 2 months? Also, is there a thing as seasonality rates?
Short term, it'll stay the same or drop. 1 to 2 months is really short.
Okay.
So what we saw seasonality, what we saw and what we usually see in December is that banks who didn't meet their targets are lowering their rates, and they are also more open to accepting difficult cases because they still need to meet their targets. And what you see, especially the bigger banks and the bigger financial institutions, they in December they're not that accessible anymore, but in January, so the year has started, they have a new big target to accomplish, and then you notice that rates are dropping a bit. So yeah, this is the seasonality.
Okay.
Yeah, and short term, I see rates dropping simply because of the European Central Bank and the Dutch housing market being stable. So yeah.
All right. Thank you. Then we're going to stay with you, Cesar, for the next question. Question is from Pierre. Does the bank check your credit score from the EU foreign country? Do they have access to an EU central credit score database or anything like that?
I like this question because usually, so what goes through my mind, I'll be transparent with everybody who's still listening, but is do you have something to hide? But no, when Dutch banks are in touch with banks in Germany, Austria, Belgium, and Italy. So if you're from one of these countries, Dutch banks have access to your credit registration. But for example, if you're from the UK, France, Spain, then no.
Okay, all right. And a question from John, also for you, Cesar. Is it worthwhile getting the mortgage paperwork out of the way before an offer is made?
Yes, please. 100%. It takes away a lot of your stress. We already know what we're working with, so yes, that's the way to go. Make sure you know exactly how much home you can afford. Make sure that your paperwork is in order. Make sure that you know where to find the documents that are needed. So what's good to know, most documents are only valid for 1 or 2 months. So it's best to do your research, find out where you can find your paperwork. If you have any, or if you expect any challenges, already forward it to your mortgage broker, so they can already prepare your case, and this takes away a lot of stress on your side and on the broker side as well, because they know exactly what they're working with.
Okay, all right. And for example, you get the mortgage from the bank. Is there a maximum limit to your monthly payments?
Yeah, that's so what I mentioned earlier. The bank focuses on how much you can spend on housing every month. I'll give an example. Is if that's 1,500, then it's 1,500, and you cannot go above that number. But based on that 1,500, using the interest rate, using the payment scheme, repayment scheme, we can calculate how much someone can borrow.
All right, cool. Then back to you, Kimo. A question from Diego. He asks, is it a good idea to buy a house that is a wreck and use the mortgage to restore it? What are the things to be aware in this case?
A wreck is a very strong word. And the thing is, like, if you buy a property that's a fixer-upper, then chances are that you have less competition that is looking for properties like that. So it might be a good deal, but have a look at two things. First of all, get somebody in who understands construction, because if you think, okay, hey, let me put a bathroom here, put a kitchen there, do this and that, then it might mean more work than you actually think if the piping is not in the right place and so on. So make sure you double, triple check that. So always get a contractor in to support you with that, and also get a preliminary quote. Why is that important? Because, okay, you can actually purchase the property and get a mortgage for it, and then the bank also can offer you a building depot, which is technically part of the cost that you would put into renovation. They'll cover if it adds value to the property. It's about 60 to 65% of the cost that you would spend on renovating it. But please be mindful that you would need three things. First, you need an appraisal report that shows the value of the property as is. Then you need to have that quote of the contractor that states this is what it's going to cost. And third, you need a new appraisal which states, okay, if you've done all this, then it'll be worth this. But therefore, definitely make sure you get somebody in who understands construction, because that's going to show you if you'll actually be able to add value for the amount that you actually put in it. So yes, it's definitely worth looking into. Please be mindful that while you renovate the place, you might need an extra place to live in. So there's double cost there. So you would already be paying for a mortgage and construction while you're renting your own home. And if you want to purchase a property that might be restricted because it's a monument or anything like that, there might be limitations to what you can do to the inside or the outside. We've had issues, or not issues, but instances where people wanted, for example, to put double glazing in, but it turned out to be a protected monument, so they couldn't do that. So please double check those little things. This is mainly in some of the old city centers in the cities in the Netherlands. But there's definitely some things to take into account. But yeah, we see this happen quite a lot. So it's definitely worth looking into if you're on a limited budget, or if you have two right hands in this case, and you're actually quite handy yourself. So yes, we do see it happen a lot. There's this, I think this, you mentioned, Ludo, the other day. I think it's called Funda Makeovers.
Yeah.
It's an Instagram account. Have a look at it. It's quite nice to see it. You can actually see what people did to places that looked like Peep, and then actually upped it to really nice places. So there's definitely potential there. Yeah.
A small addition from the mortgage side to buying a fixer-upper. The bank will not borrow you 100% of what you want to do or what you want to spend on the renovation. So that could mean that from the start, you need to put down 30 to 40% of what you want to renovate.
Okay. All right, and then yeah, another question I think is for both of you from an anonymous attendee. Is it possible to buy a piece of land and build my own house? And can I get a mortgage for that?
Yes, you can.
Like to start, Cedric? Yeah.
Yeah. Short answer: yes, you can. It's important to know that it is a huge risk for the bank. So they want to see some paperwork before you start. They also want to know what the plans are. So that process works different, and in between, the bank will ask you for a valuation report to see if their money is well spent. And also the construction company that you work with needs to have the right insurances and the right paperwork for you to get your mortgage application accepted.
Yeah. Also bear in mind, of course, that you'll have double costs as well, right? Because as long as you can't live in the new property, you'll have to rent another place. Also, in some municipalities, you'll pay ground lease, so you're technically not buying the ground, but you're renting the ground from the municipality. That might have an impact on the amount you can actually borrow. and you'll pay those fees, of course, also on an annual basis. Of course, it's really lovely to look into that and be able to build your own home. Doesn't mean you can actually build a castle there, because there might also be municipal restrictions to what you can actually build, how high you can build, and so on. So make sure you're aware of that, because that's going to impact, of course, the design, and the level of the quality of what you'll build has an impact, of course, on how much it's going to cost you. And one thing from experience is that construction always takes more time, is more expensive than you initially think. So don't count yourself rich too quickly, but please do your due diligence there as well. Get a good architect, get a good contractor. Make sure you have all the paperwork in place. Make sure you have solid plans. Make sure you have time for it as well, because just signing off on the drawings and hoping that they'll build it exactly like that is not the way to go. You'll have to be there almost every day to make sure that it's being built the way you want to have it built. So it does require a lot of time and attention, effort, but it can actually deliver really great results. Yeah, do the math, do the work, and then sit down with Cesar or with me.
Exactly. All right, cool. You just spoke a little bit about a ground lease. Can you explain to us what ground lease actually means?
Yeah, so ground lease is technically ground owned by the municipality that you rent from them. There's a few instances where it's owned by a private party. Stay away from that as much as possible, because banks are not very keen on offering you mortgages on those properties. But in general, the majority of the ground that is still being leased or let by municipalities is from municipality. And what happens is that technically they say, okay, hey, the ground value is a certain amount, and this is what the yearly amount is that you're going to pay. Depends a little bit on when that period ends. So most periods are for 50 years or sometimes a little bit longer even. And then they say after that period expires, we're going to reevaluate what the ground is worth. There's a few other factors that play into it. And then they'll actually recalculate what you'll pay on an annual basis. There's two things worth knowing. One is that the amount can actually increase by inflation on an annual basis, and it's deductible of your income. I'm not sure if it's completely deductible of your income, but part of it is deductible of your income, taxable income. And what else good to mention about that? I think those are the most important things. You'll most likely pay in 2 installments. Not all municipalities have it. It's very popular here in Amsterdam, and there's some other municipalities that have it. But there's plenty of places where you don't have to pay ground lease or anything like that. So have a look into that. Did I miss anything? Yes, there's one thing. In 2019, the Amsterdam municipality offered a beneficial discount for people that wanted to buy off the ground lease or set it. They had to actually request that discount before the 8th of January 2020. So if you're buying something, please make sure that you double check if they have that in place. Because if you have ground lease, there's several things you can do. You can either just keep it as is and pay on an annual basis. You can also say, I want to pay off the current time frame. Let's say it runs until 2064. I'll pay it off until then. Or you'll say, I'll pay it off indefinitely and I'll never pay ground lease again. This doesn't mean that you own the ground. It just means that the municipality can never charge you ground lease on that again, and that's transferable to the next owner. When you look into properties like that, have a look at how much that costs, because it's not always a definite added value. So if you pay 40, 60,000 euros, it doesn't mean that the property is actually worth that much more. Especially if you're selling in the next couple of years, it might not be super interesting for you to do that in case, for example, the ground lease runs to 2064. So have a look at that. Sometimes it's actually paid off already until the first time period ends, so you don't have to pay anything until 2064. The closer that year is, so let's say it's been paid off, the ground lease, until 2028, then you might consider taking action, because the banks will actually look at that, and it might have an impact on the resale value, but also on I think I'm not sure, does it have impact on the mortgage if it's paid off until 2028? Cesar?
Sorry, could you repeat that last one? I was going through some open questions.
So if the ground lease, the current ground lease runs until 2028 and it's been paid off until then, will the mortgage take that into account, and will there be a bigger restriction on what you can borrow?
Yeah. So this depends a bit on the bank. So some banks have a rule that if the ground lease is up for proposal again within 10 years, this will have a negative impact on the mortgage. Some have, if it's during the mortgage duration, so if it's during the next 30 years. So yeah, but it depends on the bank. And even if it doesn't impact your mortgage, it's still good for you to know if the mortgage is still affordable, if the ground lease is still affordable, because you don't want to be locked in, or you don't want to be in a situation where you cannot pay the mortgage anymore, or where you're working to get the mortgage and the ground lease paid. So it is good to consider, even if a bank would not consider it.
Okay. All right. Then we just spoke about how the ground lease affects the price. Cesar, can you tell us a little bit how the energy label might affect the price, and maybe also affect the mortgage?
The price is more of a question for Kimo. When it comes to the mortgage, so I already mentioned earlier, the bank looks at how much you can spend on housing. Some banks believe that if your home has an energy label of at least A, an energy label, by the way, is telling something about how energy sufficient the property is that you're buying. Just like with washing machines or any other product. So energy label A. So what some banks then believe is you'll most likely spend less on your energy bill, and therefore the bank gives you a discount because the bank has less risk, and therefore gives you a discount.
Okay.
Cool. In terms of the value of a property, it can definitely differ a couple percent actually value. The higher your energy label is, and then one thing I maybe forgot to mention when we talked about like what the future of housing will look like, I think sustainability will be a big thing. We're already seeing the municipalities and the government push for higher energy labels and so on. And I think that's what we're seeing now with COVID. I think there's also an extra focus on sustainability. Just look at some of the initiatives that are really being pushed, and how hard like the fossil fuel industry it has it right now. And I think that that's something that we'll definitely see moving forward. I'm also considering if working from home is going to be more important, then the energy bill is only going to be more important, because where maybe during the day you were able to just turn off the thermostat and lower the temperature a little bit, now if you're working from home more, then you're going to see that result as well in your energy label or energy bill at the end of the month or end of the year. So I think that that's definitely something you want to take into account when you look for a home. Doesn't mean you always have to go for energy label AA, but ABC is definitely solid. It doesn't mean that, because unfortunately, especially in some of the historical centers, you have houses that are just a little bit older, right? They're built in the early 1900s, and you'll see that they'll be less energy sufficient, but you get character in return for that. So yeah, have a look at the energy labels, definitely important.
Cool. Let's see, we have a follow-up question from David. David had a question before about his partner not working and living in the Netherlands. He himself does, and the question was, of course, regarding the transfer tax. He asks, what if she will find a job 1 year after the purchase? Can she still ask for the deduction starting from when she will be eligible?
And we're talking about a mortgage interest deduction. So if you buy a home as a couple, the both of you don't need to work to have the mortgage deductible for 100%. The nuance is your partner living in the Netherlands? If that's the case, then 100% of the mortgage is tax deductible. If your partner is not living in the Netherlands, then 50% of the mortgage isn't tax deductible, because in order to have the paid interest to be deductible, you need to pay income tax in the Netherlands. And if you don't do that, or you need to be a tax resident in the Netherlands, and if you don't do that, then the Dutch government doesn't want to subsidize you. So that's maybe a bit of the nuance, but I think this is a question that is is better for a bit of a
private chat.
Yeah, because
all right.
I have more follow-up questions. So, and I don't think we still have quite some attendees in the webinar, so I don't think it's interesting for everybody.
Cool. Well, then I'll try to pick out a question that everyone will benefit from. Kimo, can you tell us something about where we can find the price evolution by neighborhood?
So there are some. There's some data platforms where you can find that information. I'm not saying that's super easy to look for. Send us an email and we'll pop the links through to you guys. The majority of the names are in Dutch, so they're not going to say anything. All the services one, the CBS is a platform that has a lot of information on it. So we're happy to share those with you. Please be mindful that not all the numbers are kind of like up to date, so they're not up until the last month of December or the last month of last year, but they should give you a bit of an idea of where you see the price develop. The land registry or the cadastre is also a place where you can get some of the trend information from. But Bob, send us an email. We're happy to share some of that information.
Okay. All right. Let's see, can you, I guess this is for both of you, tell us a bit about the costs of our consulting services?
Yes, we can. So one of the things that we try to promote is transparency and honest pricing as well. So we have set pricing. We have two packages, a smart package, which is kind of like a remote service. We don't join you on viewings or with a notary or with a technical inspection, but we technically do the rest. And we charge 2,000 euros, including VAT for that. And then we have a complete package where we meet you and go along with you in every step of the way. And we charge 4,800 euros for that, 47.99, including VAT. Compared to some other brokers, we don't charge a percentage of the purchase price. We don't believe that you should pay us more if you're already paying more for the property. There's a little bit of a perverse incentive there. So we chose to go for set pricing, and we'll continue helping you until you've actually secured the home. And sometimes that takes 3 to 4 months. Sometimes it takes 6 to 9 months, where we'll be there.
We also work with a flat and fixed fee. That flat and fixed fee is 3,250 euros. As Kimo mentioned earlier, the fees that you pay, so the fees that are mortgage related are tax deductible. So you'll get back around 40%. What's also good to know, included in our fee are additional insurances, for example, a term life insurance, unemployment insurance. So we will not charge extra for that.
Okay. And a question again for you, Kimo, is do we also help with the selling part?
Not yet. We initially had the proposition where we said we want to help people or internationals find and feel at home. We've recently started supporting people with selling their properties, but we haven't broadly communicated that yet. I think that in the future we'll definitely offer that more widely. You're in this webinar, so I assume that you're looking to buy. If you're keen to sell within the years thereafter, definitely contact us.
Cool. All right. Then I have a question from Baha. Baha asks, what additional fees or taxes, if there are any, do I have to pay to buy a vacation house in cash without a mortgage in the Netherlands, since I am not living in the Netherlands? One for you, Cesar, of course.
Am I answering this? So for someone who's not buying with no. So fees and taxes, property transfer tax, the notary, and a real estate agent. I would definitely, if you live abroad, hire a real estate agent to help you find the property, negotiate on your behalf, see if there are any technical flaws, any legal clauses that you need to be aware of. So yeah, those are.
Do you know any good ones?
100%. No, you can always contact Expat Housing Network to make sure that.
Thanks, Cesar.
No, but to be fair, so it's a two-way street. So when we work with you guys, then all the paperwork is already arranged, so it makes our job easier. And if we have any questions, you know what you're doing, so you can answer it for us, and it makes our life easier as well, and therefore more fun. So thank you for that.
All right. Then last 3 questions. Question from Harish for you, Cesar. I understand that you can rent the house when you leave the country, but for how long can you actually rent the house or rent it out? Like, for example, if the Harish does not come back to the Netherlands,
yeah,
ever.
If you have approval from the bank, then you can rent it out forever. There's no
limit.
Yeah, there's no limit.
Okay. All right. And then from an anonymous attendee, what happens if I'm no longer alive? Let's hope that that doesn't happen. But if it does, and my mortgage for my bought house has not been paid off yet, what happens then? What happens to the destiny of the house?
So the property and the mortgage will go to your next of kin. That could be your partner, that could be your kids, that could be, and this is not a random order. So first it will go to your partner. If you don't have a partner, it goes to your kid or kids. If you don't have kids, it goes to your parents. If you don't have parents, it goes to siblings. If you don't have those anymore or didn't have them, then it goes to the rest of the family. So uncles, aunts, nieces, nephews, etc. If nobody can be found and you're all alone in this world, then in the end it will go to the government and they will sell it and etc. But there needs to happen a lot before that happens.
Okay. Well, let's hope it doesn't happen, of course.
There was one person who filled in, they were 45 plus. That's a very broad range.
Exactly. And then we have our last question from Ross. And this one is for you, Kimo. Ross was told by a colleague that older houses, older than 1960, are not advisable to buy. Any thoughts on this?
Did you ask your colleague why? That would be my first question, because the majority of the houses, especially in some of the somewhat older cities, are built in that time, especially in the city centers. So I think that there's a couple of things that you need to look at. First of all, is the quality of the build, and sometimes houses that were built 100 years ago are still of decent quality. Of course, it's not exactly the same as if you were to buy a house that was built in the last 10 to 20 years, but there's still some proper quality houses built. And if you look at some of the neighborhoods, and I know that in some cities, neighborhoods have been quickly kind of like constructed to house an increase in, for example, workers. We know, for example, in Eindhoven, that's been the case, but also In Amsterdam, we've seen that. And the type and the quality of building is different than in some of the other areas that were built in a similar time or even earlier. But character also has something to do with it, right? Because you want to buy something that is value consistent or increase or doesn't decrease too much. And I think that what we see is if you buy something in the same street that is either an old build that has character versus a new build, then we still see that old builds that have character are being sold for more than new builds. So that's something definitely to take into account. The location, of course, are important as well. In some areas, you won't find any new builds. So I would definitely not say that buying something that's below or that was built before 1960 is a bad investment. And also, some of the properties that were built 1960 or later are hideous from the outside, right? And that really has a impact on the value of a property. And some of them are built that look or feel newer, but that are not of same quality as some of the properties that were built earlier on. No, I think that's too easily said, and I think that you'd have to look at it on a property by property case, get some support, get a constructor or somebody that knows the quality of the building who can actually spot it as well. No, definitely I wouldn't say no, you can't have a look at a property base. Hope that answers your question a little bit.
We did get one last question from Monica. And her question is, do you think it is wise to invest in a houseboat? It's quite specific, but I've never heard it.
So there's less houseboats for sale. There's also less people looking for houseboats. There are costs involved that you might overlook. So first of all, you don't have an owner association. So every little bit of maintenance is your responsibility. You would also need to pay for the actual spot itself in most municipalities, and you need to like tow the boat out of the water every now and then to actually maintain it properly. So there's definitely a lot of costs involved, but in return you get peace and quiet because you don't have any direct neighbors. You get a pleasant living environment, except for maybe when you live on the Amsterdam canals and it's Queen's Day. But it definitely has a lot of pros to it as well. If it's a good investment, I find that difficult to say because I haven't really watched the trends in pricing for houseboats. You'd have to look on a case-to-case by basis, but I would say that the value is not as consistent as another property because it deteriorates over time, right? It's different quality and so on. So I wouldn't necessarily buy it as an investment property unless you maybe want to rent it out through Airbnb and stuff like that, and then the character does definitely make sense. But to live in it and to sell it with a big profit in 5 or 10 or 20 years, no, I wouldn't invest in a house, but if I were you. Okay. Sorry.
I think that was it.
Though. Unless you get seasick easily, because even though it might look solid, it still moves a little bit. So that's it. Thanks a lot, Ludo, for managing the Q&A. Thanks a lot, everyone, for asking your questions. It was a pleasure having you, and we had some really good questions. Thanks a lot, Cesar, for bearing the load of the finance and mortgage questions. Always very useful and informative.
Thank you for having me.
If there's any feedback you would like to leave about this webinar, either send us an email, pop it in the chat now. Have a lovely evening, stay safe, and we look forward to seeing you. As I think I had the slide up for a little bit, feel free just to book in a 15-minute free intake with us. No strings attached. We're happy to share more information. I know that some of this information you might have heard already, or it's a little bit generic, but we want to make sure that we at least tailor to everyone's needs and not spend too much time going into the actual details. If you want the details, we're happy to share them with you. Please just reach out to us. We'll be there. How do you reach out to us? Well, we'll send, of course, this presentation to you guys. You can either call us, send us an email, go to the website. You know where to find us. We're not easy. We're very easy to find. So thanks a lot. That's it. Take care.
Thanks very much.
Thank you, everybody.
Ciao, ciao.